Learn what works before you go in with a full position size. Exactly. And I tell people, when you start and you're doing a new strategy, don't throw your money into it right away, please. Like, even when it comes to the triangles that I'm gonna show you, triangle breakout trading is hard. It's not something easy because there's a lot of fake outs, there's a lot of false breakouts, there's a lot of different things that happen within the market that'll kind of mess it up. But if you work with it in conjunction with your other trading strategies and they work together, this is the confluence that I talk about all the time. You want to have all these skills kind of like a tool belt, like how Batman has all this stuff. You want different tool belts. All these things are individual things that when you work them together, they complement each other, right? But you need a good structure first. So, practicing these things are great. The triangle, this that I'm about to go over, these that I'm about to go over here, the triangle and wedge continuation patterns, this is great practice. When you're in the market and you're like, dang, I don't want to trade because, maybe I hit my daily goal or I hit my daily loss for the day that I'm, or, I'm just not feeling it, or the market's not giving you what it wants or whatever. These are the kind of things that you can still do to keep yourself active in the market, improve your skills, keep yourself somewhat entertained, I would say, even though don't trade like this, but you're going to be setting these lines and you're going to see if they break out or not, and then you're going to watch it, you're going to observe it, you're going to be patient, you're going to keep an eye on these things, you're going to look at the volume, you're going to look at all this stuff, and when it works, you're going to be like, wow, okay, cool, like I set a line and it actually did what the line that I put and set it was supposed to do. Great, you get that extra confidence, but you didn't put any money in. All you're doing is you're playing on the charts and you're setting your triangles and your wedges, and you're essentially practicing. You're live trading, not even paper trading. You're not even setting an order or anything. You could paper trade these ones if you want, but these are things that just, you're gonna, like I said, I started these streams off with the basics of like, hey, these are inside bar strategies, but now I feel like most of you guys know how to trade inside bars. Maybe some aren't as successful as others. The market's been a little frothy. It's understandable, but at least you have the skill. So now that you have the skill, I want you guys to improve and grow. So that's why I have triangle wedges. What did we do the other last week? We had reversals strategies, and then the week before that we had levels, I think, and then before that we had trending moves. We have a lot of stuff, and it's gonna. I mean, I could do this for another 52 weeks. I have a whole bunch of stuff that I can teach. I'm drinking some water, but yeah, so that's kind of the mindset that I want you guys in with this. Don't, it's going to be some cool information. Some of you guys here, let me ask, how many of you guys know how, how to, let's say, chart a triangle? So we're going to use the, what is it? The live chat only. I want you guys to kind of respond in there right now. And let me know if you guys know how to chart a triangle. Have you traded off a triangle before? Is this your first time, learning how to trade with triangles? Because you guys see me in the chat all the time. I always post random triangles. I can spot it better now. I haven't traded one. Okay. Cool. I'll wait for other people to start typing in. Nope, first time with the triangles. Great. I only know the really simple ones, never traded off them. Okay. I tried to set up a couple, but I ended up just looking at it and second guessing it. Okay. We'll get some more people in here to kind of respond. And for those of you that are, too busy, can't respond, you got your hands full, or you're just kind of listening, I understand. But there's some people that kind of, I got to push them to get active in there. I've charted them and traded them, but the entries are what mess me up sometimes. Yeah, the entries are kind of tough, especially if it's kind of an irregular triangle because everything's not perfect. Learning to spot them, yeah, that's good. I've noticed since I've been streaming, a lot of you guys have been able to kind of spot the same things that I spot. Like, you see it right away. I'll be like, do you guys, see something? And someone's like, I already saw it before you said it. I used to get wrecked by triangles because I lacked the ability to spot them, but now that I can identify them, it's much easier to manage the position and decide when to get out or average in more. For sure, that's great. Drawing them more, great. Yeah, it's good. It's a good like little game. I draw triangles on things I'm not even trading, like that I'm not even touching all the time. Sometimes I'll set lines on them before they even break out, and then I'll just forget about it, and then the next day maybe I look at a chart on one of the stocks and I just see that, oh shoot, that thing actually broke out, and it did, it did like really cool stuff. And so yeah, I'm gonna try to kind of go over those things and then answer any of the questions you guys have. So just to preface, different people trade triangles differently. This is kind of how I like to trade it personally, and it works for me. Is a triangle the main thing that's gonna get me to get into a trade? No, usually I'm already watching this stock. It's a stock that I'm already trading, and then a triangle forms or a wedge forms while I'm watching it. And then what I'll do is, I'll set my lines, and then I'll, depending on where it's at on the chart, is it near a resistance? Is it near a support? Just because you see a triangle doesn't mean that, oh shoot, like it's just gonna do something crazy. You really need to figure out where on the chart the price is, because this is when I say you're trading and watching price action. A triangle is essentially price action. You're watching the candlesticks form. You're looking at the shape of the candlesticks. You're looking at the size of the candlesticks. You're looking at the pattern that they're making in succession of each other. And then all together, what you're doing is you're essentially reading price. And so when you look at the charts, it's almost like a language that you're speaking. You're like, oh wow, okay, I can kind of, so we'll see that. Good participation. Thank you guys for those that answered. So we're gonna start with what is a triangle. There's many names for them. People call them all types of stuff. Sometimes they call them pennants. Sometimes they call them, some of them are different. Like wedges are a little different than just standard triangles, and I'll give you the reasons for that, right? And when it comes to different types, these are the main ones that I see. I've heard of some other triangles before, but these are pretty much all that I trade. The ones that I can immediately spot essentially when I see price action. First one's a symmetrical triangle, and I'll slide over to the left, and it'll kind of give you a map out, and I'll practice and show you guys onto those. But there's a symmetrical triangle, an ascending triangle, descending triangle, a rising wedge, also known as a ascending wedge, or a falling wedge, also known as a descending wedge. Can we chart something random like Airbnb and see what it does? Yeah, we could do that. You can definitely do that. Are you streaming? Yes. Are you in here? Cool. Yeah, we'll definitely look at some ones. I actually didn't even set too many examples, so we'll just kind of search for them and essentially, and we could even set up some of them that are maybe forming, or we're forming into close, and we'll see how they play out. This is being recorded for upload on YouTube. Yeah, I'm gonna barely chop it. I'm just gonna post it and then try to do timestamps, and people who want to rewatch it can just rewatch it. So so for identification, these are the main things that I want you guys to kind of look for when it comes to price action and identifying a triangle or a wedge. First thing, number one off the bat, the main thing that you're going to see is the price range is tightening. So what you'll see is price starts off wide like this, and then it starts doing this, and it starts getting tighter, and it starts getting tighter. And I always tell people, just like an inside bar is essentially almost like a daily triangle, almost, because this is usually the mother candle, and then this is like the inside bar, right? And so what you want is a break of either the high or the low. And so either go, usually up or down, depending on where it's at and what kind of triangle it is. And, there's a lot of other things that we'll kind of go over, but essentially it's the same idea that the reason why I like inside bars is why, because price has now tightened, right? The whole daily candle has now tightened, and it's looking for a direction. And just like the spring analogy I like to use, this is like a spring that's kind of coiling up and getting tighter and tighter. And once it gets tighter, it wants to pop. Which way is it going to pop? Again, we'll kind of get on that in a little bit. So that's the main thing. When you're looking at a chart, I don't know if you want to we'll just look at anything. Like when you look at price kind of like here randomly, yeah, price is kind of moving, but is it tightening? Meaning, is it kind of in a range, and then it's getting tighter and tighter and tighter. And so if you kind of look, let's see if we can just spot maybe one of these that I haven't done. I did these, but whatever, we'll just use this as an example. You see here, guys, you see exactly what I was saying with the spring. You can spot it. It goes wide, and then it starts coming tighter, tighter, touches the ends like that, and then it pops, right? And then we get a giant pop. And then this is a wedge, and so price starts tightening, 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 and then it breaks down. So you guys spot that, right? You guys can kind of see where the triangle. So when I get rid of these lines right here, when I get rid of them, now you can kind of see them without actually needing to set the lines. This is why I want to train your guys' eyes to see it. It's hard at first. You're like, wait a minute, what? But I'm telling you, the more you practice, the more you'll be able to spot it. It's like with anything. Pattern recognition, you need to practice the patterns, right? And this is nothing more than a pattern that you need to spot. So when you see this, price is tightening like this, usually what you'll see is, if you look here too, there's a bigger one that's kind of happening. You see how here is like a bigger one? You guys can see that? And I'm going to keep taking sips of water because my mouth is dry. And let me know if like anything starts lagging or anything like that. Yeah, the omega triangle. Yeah, and so sometimes what happens is you'll see that triangles, a small, because this is on the 1 minute, and I like the 1 minute only because there's so many candles that you can see the details of it. But you can see a triangle all the way up to the 4 hour. You can see it on the daily. You could even see it on the weekly sometimes. The bigger the time frame, usually the larger the breakout, because it is, bigger time frame, meaning it's going to take in a bigger range of price and everything. But you can also see that there can be multiple triangles within a giant triangle. Just started lag on my end. Okay, and then yeah, let me know if I stop lagging or if anybody else can. Am I lagging? Can you go over which candles you use to make the pennant? Yeah, I will. No lag here. You're good. Okay. Yeah, and if I do start lagging, try to get out of the stream and then pop back in. Sometimes a refresh happens. I don't know. Discord's kind of weird with that. But so I'll go over that part in a second, Julio. So the second thing. No lag for me either, but I'm on hotspot, so I would have assumed it anyways. Hustler, man. Hey, this will be recorded obviously, so you'll be able to rewatch too. Second thing is candles are getting smaller. So not only is the price tightening up, right? You remember how I was saying like price tighten up like this, but the candles up here and down here were usually pretty big, causing this big move, and then all of a sudden the candles over here tend to get a lot smaller. Right, so you'll start seeing the physical range of each candle starts getting smaller. Let's go back and look at the example. Look what was happening. So we had these big candles here, big candles, and then look what starts happening. These candles start getting smaller. Look how tiny these candles are right before the breakout. That's usually the end of the triangle. If you look like here, so we have basically a support trend line and a resistance trend line. And right at the end is called the apex. And the apex is kind of important because price usually doesn't get to the apex before it breaks. It'll usually break a little bit before it. But the apex is a good sign of that. If it just keeps going past the apex and it just keeps doing nothing, you are allowed to adjust. But as soon as it starts, you can tell when you keep adjusting and it's just not doing what, it starts getting wider or something's happening, then you know that it's basically a failed breakout or it didn't happen. As long as I'm just listening, it's fine. Okay. So, and then another thing that you want to look for is volume. You know how I always say volume is really, really important? Volume is decreasing typically. This is a big sign, along with the candles getting smaller, that, price doesn't really, it's either losing steam or it's prepping for a move, one or the other. So if you look here, let's see if it actually did. We got to kind of, what's price in this one? That's, okay, wait. Let's go with, I guess it just had no volume here. Well, that's kind of weird. So, yeah, I guess in this one it's kind of not really losing volume per se. It's just flat. That's kind of strange. Where will this be posted? I'll post it on my alerts when I actually do post it, and then it'll be like a YouTube link. So I'll do that. But I guess this wasn't that great of an example. Typically, this is not normal. You'll usually see price starting to like the candles start to kind of go down and kind of make this moment where you can actually make a trend line from top to bottom here like that, and you can make a trend line on the volume. This just wasn't that great of an example. But if you look, actually look here, this, you know why this is getting so flat? Because it was a giant triangle. You guys understand how I was saying that there's a bigger triangle within the triangle? So we were actually at the tip of the bigger triangle, which makes sense why the volume was so low towards the end. You see here, look at the volume. You see how it's decreasing? Because this right here is a triangle in and of itself. So if you look, we have it here like that, and then we have it here like that, right? Now sometimes you see the little pop. I always tell people, the ones I'm a little bit more strict with in the beginning, because you're not gonna try. What volume indicator is that? This is just a regular volume. And then the thing is starting to lag, so I'm gonna switch. What time? Let me mark this time up real quick like that, and then I'm gonna save it. And then now if we close and open, hopefully Apple opens up. Cool, and then we'll have that date set. Let me find it. There we go. Oh wait, whoops, I'm going the wrong way. Okay, cool. So now look, when you look back, look, this is the bigger one that I was trying to show you guys. You see now it's a lot easier when you zoom out to see it. Was that an all-time high breakout on Apple you're looking at? This was, yeah, I think it was that day when, I don't know if it was an all-time high breakout. I think the high was already set, but this was the beginning of that 180 run that happened for the next like month or so. But this was the beginning. I think this was when the Apple Car news came out and stuff. So, but you were seeing, so you could actually see how price came up, coiled, right? Hit the top here and hit the bottom here. I always tell people the way I like to do it for a triangle usually is that you want 2 touches here and here before it fully forms. So this one was a little bit more bullish just because the price was staying up here most of the time. But you'll get 1 touch here. And okay, so they're like, oh, okay, how do you get a touch? Because the beginning of a triangle is so impulsive usually, which will cause this wide move, you're going to have a impulsive move up, and then that's where you start your top, and you'll have an impulsive move down, and that's kind of where you'll start your bottom. And so we'll kind of practice on a bunch of different ones, because like I said, in a perfect world, because we're looking at these perfect triangles on the chart pattern examples like on Google and stuff, yeah, they show these perfect lines. They're not going to be perfect because price, this is these are humans and computers, but mostly humans trading this, and it gets very emotional. So things won't perfectly. Sometimes they'll be perfect. Sometimes it's almost like picture perfect, and sometimes it'll be a little off. But what you want to look for is when it is getting ready to break out or break down, you usually confirm it with like a big spike in volume. So if it didn't have a big spike in volume, you can consider it kind of like a overreaction, and then it comes kind of back. So you can give it time. It doesn't need to touch this like perfectly like that, right? That's not really necessary. What I like to do is to get most of the formation in the candle. That's kind of your goal, because the lines aren't really anything other than you making it easy for your eyes to spot what's forming, right? And so what you want to do is, I usually start on the wicks, right? I'll usually start on the wick like this, and then I'll kind of bend it into, whatever it needs to. But sometimes what happens is, if let's say it comes down again, test like up here, and the wick isn't the range that it actually is helping keep the form in, I'll move it to the body of the candle like that. So wicks is like you start it there, but if the shape isn't really following the wicks. Sometimes a triangle will make perfect triangle with just wicks on the top and the bottom. Sometimes it makes a perfect triangle with just the bodies and you kind of ignore the wicks. So there's no straight rule of like, hey, we only trade with the wicks. I've seen people say that all the time. Oh, you're not supposed to do it like this. You're supposed to keep it on the wicks. Or some other people will be like, oh, you're not supposed to put it on the wicks. That's not even where the price closed. You have to keep it there. In my experience, both of them work. It really just depends on, are you getting most of this form in here? Like if you get a little pop here, it's not that bad, because what you're doing is, look, if you can get this wick, look what else you're getting. This wick, you're getting all that shape and you're getting this wick and this wick. So it doesn't really matter, right? The only reason why you could allow this is because it makes sense with the rest of the formation. Then this kind of just looks like a mistake, or like a, you know, if somebody was drawing something, it was like kind of like a small error in the price. That's kind of how I look at it. Does that make sense? Thumbs up if that makes sense. If you have questions right now, ask them away in the let's see, we're gonna use the live chat only chat, guys. So if you can, right above the live stream, you'll see live chat only on the left. You click there and then you can you know, you can kind of listen in. Got it. Okay. And practice makes perfect. So you're going to watch this and then you're going to go, okay, I understand everything. And then you're going to go in tomorrow. You're going to try to make a triangle. You might, you know, it might not work the way you thought. Don't think, oh my gosh, I mean, he gave me bad information, or it's not working or whatever. In reality, what's happening is maybe the triangle itself just failed. These things don't work every time, right? They, you know, they have, I don't know, just above like a 50% success rate or something. It's really not like that, you know, that serious. Not like a 90% or a 95%. So, you know, sometimes it's that. Sometimes it's just maybe you thought it was a triangle, but reality, it was just kind of price kind of tightening up, but it was kind of doing its own thing. So, but yeah, usually I like to be kind of strict, because what would have happened here is, let's see if we can replay this far back. I don't know if it's going to let me. I think on the 1 minute chart, they only allow, let's see, like here. So let's see if, oh, okay, we could do it. Cool. So like, you know, if price, we were watching price kind of shape up right here, you wouldn't even actually see it. This is one of those kind of tricky triangles, because look, if you looked here, somebody would have been like, oh, okay, you know, this is price tightening up. We're going to make a triangle, like, you know, something like this or something, right? You would kind of think that, which in that moment, it kind of makes sense, but you also have to understand that this, for this move, usually it doesn't go from this to this really quickly, right? If this is kind of big, you're going to kind of expect it to really take its time to move, right? It's not like price just goes, yeah, super big, and then all of a sudden, boom, 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 and then it just breaks out. That's usually not how it works, because the triangle means that it takes a couple taps to get rejected from the top, a couple taps of support at the bottom, and somebody is gonna, you know, is gonna win this battle. So, you know, maybe you would have had it like this, and then you watch the price continue, right? So we're gonna watch it kind of continue and play out. This would have been maybe what you had, and then as you start to see what's happening, you'll start to see that, oh, wait a minute, I can adjust it. Because this is what's great about trading and doing the triangles. You're free to adjust it. It's not like this is set in stone. So, you know, oh, whoops, I'm going to get rid of that. Kind of make this thing go a little faster. Let's see. So look, now you're like, oh, wow, okay, so price kind of stopped there. Let me see if I can maybe set a line. So then you would kind of go like this and see if it'll work. Because remember, you need 2 touches at the bottom just to start it off. That's the goal, is to get 2 touches at the top, 2 touches at the bottom, and then you want to drag this thing out and make an apex, right? You want it to kind of go like this and make an apex, and then you want price to actually respect that line. So now when you look at it, you're like, oh, okay, now, you know, it's starting to do something, you know, volume is kind of, you know, getting lower. Okay, you're watching it, and then that's the breakout, and then that's the, you know, how it would move, right? So what I want you guys to really pay attention to is get your 2 touches on top and bottom, right? 1, 2, And then you usually want to set the lines before these happen so that when you do line it up, you can actually watch what price does. Does it respect this line? If it doesn't respect it and it just kind of breaks through it and it catches back up, readjust your triangle. Does it still make sense? Does it still look like a triangle? Is price still tightening up, or is it doing some weird? If it comes all the way down here and then comes back up, then you cannot have much of a triangle, or it would just be a really, really big one, right? Wedges also work with support and resistance lines too, correct? Wedges, like, are you saying wedges also work, meaning like going into a support or resistance, like price is going into it? Last time I think you said the measurement of the breakout should correlate somewhat with the size of the initial impulsive move, right? Yeah, I'll show you 2 ways that you can kind of calculate or give a price prediction of like where that breakout should land. There's 2 different ways. I've used both, but yeah, I'll get to that when we kind of use the example of how to kind of trade these things. So like for so far though, you guys understand, right? If you want 2 touches, that's number 1. So the touches would have been this, but I kind of like impulsive moves. Like, okay, cool. Here's one impulsive move up, right? That's an impulsive move. That's an impulsive move. That's an impulsive move right there. This one looks like, it needed to actually come back down here, but it didn't. Maybe there's a buyer here or something. A whale kind of bought in. You see how it was on this downtrend, just reversed randomly? And then people thought maybe that was going to be the move that was going to break it out. But nope, it still needed more time to kind of fully shape its thing out. But it's cool how it actually ended up playing out, like a pretty decent triangle, essentially, because, you want that price tighten. So in your eyes, what you want is something to kind of look like this, right? You want price to go like that, boom, boom. Usually it does something like that, and then, it'll break out, right? 2 touches on top, 2 touches on bottom for triangle formation. Correct. That's usually the standard, because think about it, right? If you're making a trend line, you can't make a trend line with just 1 touch, right? You need a second touch. Does that make sense? So you need a 2 touches in order to get that line all the way across. And then the 3rd touch, since you didn't do that, 1-minute charts are best for triangle formations. It's not that they're the best. They just make it easier to spot at first, because there's so many candles that you get to see the price shape out, right? If I go, and we'll do it right now, I'll go to like the 3-minute and the 5-minute, the 10-minute, the 15 or whatever, and you'll start to see that this starts to get harder to make out as you get in higher time frames, because there's less candles. This might be 1 candle, and then this is another candle, and then that's another candle, and then all of a sudden the whole thing looks like 2 candles. But when you get better at triangles, you'll be able to spot a 1-minute candle or a 1-minute triangle on like a 10 or 15-minute just by seeing a big candle going into a little candle. So, but yeah, Prophet, I'll answer that question when we kind of get to that point. So let's see. We'll go to the 3-minute, and look. You see how now the details are getting a little blurred? Like the candles are big and everything, but look, you could clearly see the volume. Look at the volume. You can clearly see that the volume is going all the way down, and you could almost make a trend line, essentially. You'll have some pops, but overall, the price is kind of going like this. Whoops. Right? It starts up here. It has these little pops, which is one. I think this was the one that kind of faked out and thought that, okay, that's the breakout. I think this volume spike was the one that kind of faked people out and think, oh no. But then we got another volume spike, but it was a volume spike down, and it came down here. Got caught, big wick, that was nice. Tapped it, came through, but this is what a breakout looks like. See that? It's clear when a breakout is happening usually. And that is going to be your confirmation that, the triangle has either, broke out, up, or it broke down. So definitely keep an eye on volume. Once you start seeing this, they all work together. Price tightening, the only way price tightens is if the candles get smaller. These candles cannot fit over here, right? So since the candles are getting smaller here, that also means that what? Since the range is getting smaller, that means by definition the candles are getting smaller, right? And then by definition, if the candles are getting smaller, that means the volume is getting smaller. They all work together. They all point at the same thing. And this is why a lot of people go, I don't really want to use indicators. I can just read price, because that gave you a lot right there. You didn't really need any other indicator other than, you would have your support and resistance lines set already for Apple to know where it's at. This was, trying to break out to all-time highs. You knew that it was bullish price action. You know that there's a lot of volume happening. You see a triangle form like this, and then you see the breakout. Did you need the MACD? Did you need the RSI? You didn't need any of that, right? You just, you could actually, people trade like this all the time. And I think as traders get more and more experienced, I think the amount of indicators that they use actually starts going down. There's like a big, and then they stick to a couple of them that they like moving averages or, whatever. Everybody has their little thing, but it should be, like I say, indicators are like seasoning. Price action is the meat and the potatoes of it. What's the name of that volume? Can't find it. It's just volume, I think. I think it's just volume. Hold up. Yeah, it's just volume. It's like the built-in. It's no different. But yeah, so your goal in the future is to kind of remove all the clutter from your screen. Maybe pop them in the MACD, just to kind of see what it is, and then take it back out. And then maybe look at the RSI on the bigger time frames just to see if it's overbought or oversold if you're looking for a swing, and then you could just kind of take it out. But, price action really rules. Like, support and resistance is the most, like, the price reacts the most consistently to support and resistance. Those are areas of supply and demand. Those things dominate any other, indicator that you use, or anything else other than that is support and resistance. That's guaranteed. And then on top of that, volume definitely tells you what's going on, when it comes to the amount of, buyers coming in, or the amount of, movement that's kind of occurring. So support, resistance, volume, and then I would say I personally like moving averages, but I use them kind of to guide me in seeing which side that price is on. So if you turn on like the EMA 9, on this, that, okay, price is kind of using this as because moving averages can be used as dynamic support and resistance. Dynamic meaning support and resistance is static. It doesn't move. It's just stuck there. But moving averages will kind of guide and actually act as support or act as resistance depending on where the price is. So too many indicators can start drawing contradictory conclusions. Exactly. You don't want to miss out on a really good play because you have too many. It's almost like having too many opinions. If you have too many people behind you with differing opinions shouting a bunch of things like go in, no, don't go in, this and that, you're going to get confused. You're like, okay, I don't even want to go in. Or you're going to have what they call paralysis of analysis, where you have so much information, you don't do anything and you just kind of sit there. So it's like, slow it down. But I'm also not saying, hey, take everything off tomorrow and just try to trade price. This is something that you're going to practice over time. You're going to put in work, chart time. Staring at a screen, surprisingly, is going to make you more fluent in what the screen is telling you. So, don't rush it. You could work as hard as you can, give yourself that time, but definitely, the more you're going to be in this trading game, or, this field, you're going to just get used to reading price action, right? And you'll start seeing a lot of common things. So, cool, we get a volume break, and then we get the candles confirming it. And let's see, what other area were we at? Okay, yeah, so we saw volume decreasing, and then what did we see? A sudden spike in volume and an impulsive move up or down. Basically what I was just explaining. A spike in volume, an impulsive move up or down. In this case, it was up. Price action was very bullish, and we get those big 3 candles to kind of confirm it, right? And now... so Mad Rob, I kind of asked for you to make a correction or like more details. When you said wedges also work with support and resistance lines too, correct? Are you saying that they work, like if a support and resistance line is above, you can use that as your, to trade the rising wedge, like in this one? Or are you saying that support and resistance within the structure? And once you answer that, I'll kind of, I'll make sure to kind of answer your question and clear it up. But let's follow what's going on here with the triangle, right? So what happens is price kind of continues, right? Does its own, it's doing its thing. We're getting that volume spike. Everything's looking good. Look at that. You see how it tested that EMA, and then look, the EMA ends up being support. You see how I was telling you moving averages tend to be support lines that you can't see if you didn't have it. So then price, what does it do? It tests that EMA again. It starts making a new structure. Now this is a wedge, a little different than a triangle. And once we go over the anatomy of each triangle and wedge, I'll kind of explain why one is called like a wedge and one is called a triangle and what's different about them, because they all have specific, the names are specific to the anatomy of the actual triangle. So we'll kind of play this out. I'm gonna try to make it a little quicker. Come on, speed up, speed up. So the line is there ahead of time, but look, you start seeing that it's respecting, look what it's doing, right? It's respecting the high, but then it's also, when it comes down, it's also respecting that low. So look, it tries to break, but it doesn't. Look what's happening to the volume. You guys see that, right? So the individual ones, I don't want you to really focus on the individual ones. Just take a step back and just look at from the beginning, basically, range of the structure as it's coming up and turning into this, and then just start to notice a trend. That's all I want. You're gonna have random spikes like this. There's whales in the market that just buy big orders out of nowhere. So I don't want you guys to make a trend line like this and then go, oh, you know, it made one break like this, like I have to readjust it. You know, if the line works, like if you can make a trend line going down, great. But sometimes, like I said, price is not perfect. So what you do is you just want to make sure that the volume tends to be, you know, going down or so, right? So, and then we see that breakdown that happens. Let's see. What was that? I think this was the break. Failed. Okay, so this one, look, I'll give you, yeah. Okay, so it broke down. Look, for right here, we'll kind of pull it up so that you can kind of see exactly what was going on. So this is what's called a rising wedge. So you know how, we'll save this one actually, because then, so we got all of these. Let's start looking at the anatomy of each one so that this other one will start to make sense, right? Let's exit this, and then we'll move it over to here. These are the triangles up top, and then these are the wedges at the bottom, right? So we start off with pretty much the most common one that I see is the symmetrical triangle. And the way you identify each one is literally by the support and resistance trend lines that you're going to be making to shape these things. So if you have a downtrending resistance, so the top is coming down, and you have a uptrending support coming up, that's how you make a symmetrical triangle. So they're going to converge. The ceiling is collapsing and the floor is rising. And in the middle is, you know, the price is coming up. So sometimes you'll see, and it's typically, so when I say that this one's like a bullish price action, this one's bearish, I say usually, because not always. Sometimes you'll see a bearish triangle and it does something bullish, right? But usually, if you're you know, playing odds, this is what I see, and I've seen many, many, many times. A symmetrical triangle is actually a neutral price action, right? So what happens is, because these two are battling, you don't really know who's going to win. Is this going to cave and break price down, or is this going to be strong enough to pop it up? So when you look here, if price is doing something like this and it comes up and then it does something like, you start noticing price do this, and you're like, wait, you know, there's a downtrend, but then there's also an uptrend. Okay, you know, which way is it going to go? So we'll stop it there, and then once you delete these two, price starts to look kind of like that. Now this is obviously perfect, and nothing is perfect, but your eyes are going to start to see this. They're going to start to see price doing this, and then all of a sudden, wait a minute, what's going on? So now to bring that back, these ones are a little bit harder to predict. Usually what I do is I look at previous price action. Where was it previously? If it's moving up bullishly, right? And let's say this actually is doing something like this, and it looks more like a bull flag, but it's not a bull flag, it's a bull pennant. So what a bull flag does is it's parallel. Price doesn't actually tighten. It just, they do what's called downtrending resistance, but also downtrending support. That's a bull flag. But if you see that price pops up like this, but the price at the bottom, it seems like, wait, price is going up and the candles are getting smaller, you're making a bull pennant. So in that kind of case, you're like, okay, this setup looks a little bit more bullish. It is a neutral price action, but the price before is kind of giving me an idea that more than likely we're going to continue up unless it fails, right? And then there's another case where instead of that, price, is falling, and you guys have seen a bear flag, right? So a bear flag is when price drops dramatically, and then all of a sudden you start seeing price stay in a channel, and price seems to be going up. So people are thinking, oh, we're making a recovery, but it's actually making this formation. Well, the same thing can happen in a symmetrical triangle. It's called a bear pennant, and price shoots down like this, catches a support, but then now it's making something like this. So if it was something like that, you're betting that, more than likely we're going to have another continuation down, because triangles are essentially continuation patterns. What they do is price figures out what it wants to do, and then it continues in the path that is, the decided path. So you guys following that so far? So symmetrical triangles are usually neutral. You can use previous price, but then also remember, where is it on the map? Or I would say the map. Where is it on the chart? Is it near a support? Okay, maybe this is actually going to turn into something like a double bottom, and it's going to go back up. Did we just fall off a all-time high? Okay, then this looks like it might actually want to go back down. So there's more information that you need to be more accurate with your triangles. If you just see an ascending triangle and you say, oh, it's usually bullish, I'm just going to buy calls, that's not enough, right? You need more to prove that case, or else all you're doing is triangle chasing, and those people don't end up successful at all. So I'm going to... Okay, it's starting to get laggy again, so I'm going to make sure to save. And then we're going to open this thing up again. Fuel cell, move it over. Okay, cool. It's a lot clearer now. Thumbs up. You guys following? Any questions so far on the symmetrical triangle? Yes, following. Cool. And I'll show you guys, after I kind of introduce you guys to each one, I'm going to show you guys how to trade them, because they're essentially there's the same kind of policy with all of them when it comes to trading, and it depends on your risk tolerance, how experienced you are with the trade, how experienced you are with the chart of the stock that you're actually trading. There's a lot of things that go into it, but there are some rules that I feel like I should tell you guys, because that's kind of the rules that I follow. So no questions, then we'll continue forward. I have some people typing, so I just want to make sure that they're following. You can also do Control+R to refresh your tab. Control+R. Okay, I'll try that out. Doing good. Keep going. Cool. All right, so symmetrical triangle. Okay, the next one you see is an ascending triangle. Now, what's different between the symmetrical and ascending? As you can see, there's usually a horizontal resistance. Now, the resistance isn't falling in, and it's not going up. So it's kind of just right there. This is where it's very important to know, is this ascending triangle actually hitting a key resistance level on the chart? Because if it is, it makes it that much more exciting, because you know that if price does break through, it's breaking a level, and you can actually trade this very well. So the anatomy of it is a horizontal resistance, but an uptrending support, and it's usually bullish price action. I like ascending triangles. They're one of my favorites to trade in a like uptrending market. And one of the things that the way I want you guys to kind of picture it is, think about it like this. There's always a battle between the bulls and the bears in the market. And the bulls and the bears are what? The buyers and the sellers. Either they're going to be selling a whole bunch of these shares into the market and throwing it and making price come down and kind of overwhelming the amount of buyers to where there's more supply than there is demand and the price goes down. Or there's going to be a lot more buyers to buy up all that, the supply. And then the sellers are kind of like stepping out and going, you know what, there's too many buyers here. I'm not going to make any money, shorting this. So I'm going to kind of take a step back or wait until another level comes. So if you guys, have you guys seen the movie like World War Z? I always like to use this analogy. If you remember, the zombies, and I'll put a GIF in the chat, and you'll see. So this is kind of how I like to look at price. I know it's weird, but I like to look at price kind of like this. And the zombies are like the buyers, and then the sellers are like the, the army and the people on the wall up top trying to keep them down. So if the sellers are up here throwing shares down, trying to knock down the price, what you see is, this is what you start to see. Let me do the path. Okay, so let's say price is coming up. It hits a resistance, boom, falls down really hard, right? Biggest impulsive move of the formation happens in the beginning. But then what it does is it tries again. Dang, it gets knocked down. But look, this is the key area. You see how I say you need 2 touches each? 1, 2, 1, 2. As soon as you see this, you're going to start to be like, wait a minute, what's going on here? Right? Because now we're making a higher low here, but price isn't doing anything up here. It's not even pushing price down. At least with the symmetrical, and the reason why it's neutral is that the bears are actually winning here. They're actually pushing the price down. It's not making, it's not tapping the same area. It's actually making a lower high each time, but it's also making a higher low. So this is like a straight up 50-50 chance of like, okay, whoever wins wins. In this case, the sellers aren't actually pushing the price any lower, and if anything, the buyers are actually pushing the price higher each time, meaning that each time that they knock them down, they're not actually getting lower, and they're actually coming closer. So if you continue this pattern, what's going to happen? They're going to meet. They have to meet, right? And if they didn't have the strength here to do it, they're not really going to have the strength here, because the sellers also know when they see this pattern that, oh man, like I don't know if I want to keep doing this. This is a bullish price action, and usually it will break, that way, and then the sellers will move up to the next level and try to do the same thing and kind of push price down. Right? Now, when I say usually, what happens is, just like in World War Z, they can keep doing this, and then eventually the buyers run out of gas, and then it does something where it fails, and then it has a lower low. As soon as we get a lower low, and it breaks the low here, now we're on a downtrend, and it looks like we tried and we failed, and we broke down. So it's important to know exactly, I'm going to keep saying it, you got to know where on the chart this formation is forming. Is it in the middle of a resistance and support? If it's in the middle, it can kind of do, it's a little less sure. It's kind of up in the air. It's showing that it might not be a strong, clear resistance, and it's just at that moment, in the market, just happens to make a formation. So that's an ascending triangle. Right now, so horizontal resistance, uptrending support, usually bullish in price action, and that break is going to be the break that kind of answers the did they win or not question. Next one is the descending triangle, pretty much the exact reverse. This time the bulls are the weak ones, and the bears constantly are pushing price down. In this analogy, I like to give the example of someone hitting a sledgehammer on the floor, or on a wooden whatever object it is, and they just keep hammering away at it, and each time it seems like they're making more and more progress at keeping the price lower. Like you're making more cracks over and over, and eventually it's going to meet at that apex, and what happens is price is usually coming down, hits that support, the buyers buy it up, but the sellers push it right back down. All right, buyers, you guys are going to run. Who's going to run out of gas? Well, it looks like the bears are getting stronger, and the buyers are getting weaker because they're not pushing it as high anymore. So now this one looks like we're going to get a continuation down. This is really nice on a key level of support. When I start to see this on a key level of support, I like to, this formation is really nice. Usually means it's going to break down. Usually, right? Not always, but higher probability of it. But what can happen also is it can keep trying and trying and trying, and then all of a sudden what happens? We make a higher high, and now it looks like, oh, maybe we just had like a quadruple bottom, and now we're about to break out. Or basically the buyers came back in. They rested for a minute, and then when they realized that the sellers didn't have enough power, we overtook them. So these are areas where you should, if you're going to trade a triangle, these are the criteria. You know how I say you don't just go into a trade and go, I hope I make money. You have to have like clear rules, and I think you guys see it. You guys see it when I am live trading, right? On like a Lotto Friday, I always explain this is what I expect it to do. And if it doesn't, I get out. This is the area where I'm going to get out. And then this is an area where it looks like I'm going to take profit. I always say that, right? Can you guys be my witness? Or do I just go, I'm just taking the trade and I hope like what happens. Yes, I've heard you. Good. Yes. Okay. Just making sure I'm holding myself accountable. If you guys were like, nah, you know, I didn't hear it, I'd be like, oh, okay, maybe I don't say it. I hope what happens. Yeah, yes, you are a planner. Yes, I heard that. Now you're just really lucky. I know, right? It's so lucky, always. So, and you guys saw on when we did the live trading on Thursday, what does it say? You capping. You know, on live trading on Thursday, the market was, you saw how I kept making these triangle formations, and there wasn't, like, it wasn't following through. Like, it would happen, but then it would just catch itself. It wouldn't like have any follow through. And what was causing that was the low volume. You know how I say the volume is really important. You need that volume spike, that rush of buyers or sellers to come in. Well, on a low volume day, these formations, they might form, but the breaks aren't as powerful, or they might be a little bit more random. You know, it just depends on who steps in at that moment. Since it's low volume, you know, less people are needed to really make like a move happen. So, but yeah, that's always how you should set it up and you know, and trade it. And I'll kind of give you the things. Okay, so now we got the triangles out of the way. Those are basically the three triangles that you'll see. You know, this one's usually neutral, this is usually bullish, and this is usually bearish for the reasons that I said. But I also added the usually and gave you a scenario why it would do the opposite, or, you know, it wouldn't completely go through. So don't be like, Amin said ascending triangles bullish, so I put all this money in and did the opposite. Okay, well, did you listen to the rest, right? So now we have wedges. Now, wedges, either you can call it a rising wedge or you can call it an ascending wedge. I like to just call it a rising wedge. That's how I got used to calling it. Now, see, look, there's something different that happens here that makes it different than these ones. You see how these have opposite trends? This one, the uptrending support, downtrending resistance. This one has a horizontal resistance and an uptrending support, and like vice versa. Well, in this case with the wedge, they're actually going in the same direction. So we're actually, look, we're making higher highs, but we're making higher lows too. So it's like, wait a minute, what, you know, what's going on? But this is when if I pointed to here, it's really important to see price range tightening, candles getting smaller. Because this is the important thing to kind of note. Because here, the only reason why this isn't a normal uptrend, you know, because this looks like an uptrend, right? Uptrending resistance and support looks like it's making a, you know, like this, making a higher low and a higher high. And it's like, okay, cool, we're on an uptrend, but that's not what's happening. What's actually happening is price comes up, you know, hits here, it's hitting here. Oh, this is pretty ugly. Let me try this again. Like that. You'll see kind of like price kind of come down, come up here, come down, come up here. And you're like, okay, so if we're getting a, whoops. So the next question you ask yourself is, wait, if we're uptrending resistance and uptrending support, doesn't that mean that it's bullish? Like we're on an uptrend, right? I mean, that makes total sense. But why is it usually bearish? Well, think about like anything. Think about somebody running out of steam. Think about somebody who's sprinting and sprinting and just keeps climbing and climbing, and then all of a sudden they start losing that power. They start losing those big candles. They start losing that momentum, like at an all-time high. Exactly. The best areas to trade this setup is actually when you're getting near a strong resistance. When a strong resistance is ahead and you're seeing a rising wedge, oh, I mean, that's a nice setup, because what you do is you can take the position and go, okay, if I'm wrong, that means that we will break this current, you know, resistance above. So my stop loss is going to be just above that resistance if I'm going to take a put and play the downside. That makes sense? Yeah? Okay. Is this stuff you guys already know, or you feel like, no, wait, this is actually, like, I didn't know this? because a lot of stuff is on YouTube, and I hear people talk about it. All new, cool. Stuff I didn't know, cool. Little bit of both. Yeah, Elhasser. New information for me, good. Did not know, cool. All new, great. Now this is a lot, so you're gonna have a lot of stuff to practice on the charts. You're gonna be able to spot these things with time. Some happen more than others. Okay, it's starting to get a little laggy, so what I'm gonna do is try out that thing. So what was it? Control. Let me see what trade said. Control plus R. Okay, I'll do Control R. See if that works. Oh yeah, it does. Nice. Oh, okay. Trades just knows everything, I swear. That was good. Thank you, Trades. That actually worked. So now I could just start doing that when everything starts getting slow. All right, cool. So yeah, that's why the rising wedge is bearish typically. Now I've seen some rising wedges break, but what is that? What does that mean, guys? That means that we actually break out of that resistance. So if we did, then that just means, price action overcame the odds, essentially. Wouldn't have thought about it like that, but it made great sense. Great. Your price action analysis correlates a lot with Rainer Tao. I don't know who that is. Maybe I watched some of their videos, because the thing with me is I've watched so many videos like on YouTube and all this stuff, and I've written down so many notes that sometimes I forget where I got the notes from or where I got it. So yeah, there's plenty of educators on YouTube, so maybe. But cool. Let's see. Any other things? Rainer Tao videos are very helpful. Cool, I'll check them out. Yeah, not too familiar, but okay, and then the same. Yeah, he's a pretty OG YouTuber for technical analysis. Cool. All right, I'll check out his stuff. So same idea with this. I'm not gonna go into all the same things, but it's pretty much the same concept, right? Price is coming down, looking really bearish, right? Everything is falling, but all of a sudden, price starts tightening. It starts getting really, really tight. Looks like the sellers are just not really, pushing it down the way it really needs to, and we're probably nearing some type of support line right here. And what happens is price takes, rockets up, right? And usually some people might, and this is probably, if you guys have ever been reversed on, this is how most FOMO traders get destroyed. They're going, oh man, they see this move down like this, and they're like, okay, I'm gonna FOMO in with some puts. And then they hold it, and yeah, oh man, I'm up 20%. Oh, they take a screenshot, I'm up 30%, and then all of a sudden they're liquidated. So, definitely don't be that person. I've been that person in the past. Maybe some of you guys were that person last week, but now right? Make sure price isn't tightening before this happens. Liquidated for sure. But the same thing, right? Downtrending resistance, downtrending support, usually bullish price action. And that's these are the ones that we're gonna, not only are they liquidated, they are on Wall Street Bets. Exactly. Those Wall Street Bets guys, just straight gambling, hype, playing with that trust fund money, but yeah, so that's kind of the ones that I want you to look at. So with wedges, you guys know, right? What if it's an uptrending resistance and an uptrending support, but price is tightening up, what would that be? A rising wedge. Opposite, falling wedge. Descending triangle, ascending triangle, symmetrical triangle. There's really no symmetrical wedge. Well, actually, there's another one I don't use, but it's almost like a broadening triangle, where price is doing this, but it's like price is kind of going from small to out. But I don't know. I've never actually traded that or anything. So now you're okay. So now you guys know how to trade, or not how to trade, obviously, but now you guys know what to identify, right? You got that. I'm gonna keep kind of repeating them so that they kind of stick. So now you're going, okay, cool. I know how they are. How do I trade them? Because what do I do? When do I go in? When do I get out? How long do I hold after the break? All these questions kind of come up. So obviously, the main thing, I'm going to keep saying it over and over, make sure you plot some type of near-term resistance and support within that chart, it'll kind of give you a roadmap of an expected move. Because some people will say, okay, so what you do is you take the one example is if you want to go with a price prediction is you take the length of the first 2 points and then you take it to the breakout, and then that's like an estimated move up, to see projected like move, right? Or a move down to see the projected move down, right? It would be something like that. That's one way. But if there's a resistance right here, or I mean a support right here, then this doesn't work because the support supersedes this strategy of price of like predicting where price will be, right? Does that make sense? So first of all, know your levels, know where everything is, and you'll kind of get an understanding of, okay, that. Now, so that's one way, which is, use the high and low distance, and then you place that right on where the breakout is. We can try it out with this one. Let's see. So, ooh, yeah, I need to do that thing again. Hold up. Make sure everything is saved. And then we'll go, what was it? Control R. Does it come up on the same spot too, or does it start all the way back? Yeah, it starts all the way back. Damn. Okay. So here we are. So we're going to use that move, right? So we have this low here. We have that. So we're going to make a line. So we'll kind of go from, here to here or so. We'll put it up a little bit because it's diagonal. So whatever. And we'll kind of place it right on that breakout, and it ended up being a pretty good, it went up a little bit more than that, but you could see that, look, that actually got resistance right there at that line, which is pretty cool. Actually ended up working out pretty good. Look right there, if you did it, it would have came back, and at least you would have taken profit. You would have had two things to confirm it. You would have had the move coming back and testing the EMA, or that, right? That's number one. The number two way is, and I'll go here to show you guys, is depending on which way it breaks. So let's say, this thing goes like this, and then, it breaks out this way. What you can do is you can actually use the support side of it like this. You can copy it, right? Copy that line and paste. I do Control C, Control Z, and go here on top of this. And then kind of, that would be kind of the range that you would want to get out at. Does that make sense? So you would do it at the, the whatever side it broke out, the base of it. Essentially, you would put that there, and then you have kind of a, a move. And it's essentially, I mean, what is it doing though, right? It's just taking this end, putting it here, and if you put this end with this end, it just ends up being the line. So there's two ways like that you can do it. Just depending on what your style is or what you like to do. And then I think the third way, what is this sorcery? I got all the secrets, man. So the other way to do it is, and what I like to do, which is more so like reading the price, is once it does break out, right, whatever time frame that you're on, let's see, let's go to the 5 minute and see if we can do the same thing. Okay, cool. So if we look at the 5 minute, one thing that you can do is, I like to use the EMA 9. So you guys know how I like to use the EMA 9 to kind of stay in a trade, right? If usually when a breakout happens, what also happens is the price moves really far away from the EMA because of the impulsive move, right? We'll get this really strong move. That means that the current move is moving quicker than the average move, which is normal. And so since it's doing that and it moves far away, whenever it does tap back onto the EMA, I like to get out. So some people would have gotten out like here if they use that rule, but personally, this is how I like to do it. You would have taken basically the whole move pretty much up here and taken profit here. What I say is if price is moving impulsively far away like this, even one close under is enough for me to kind of go, especially if it's a big candle like this. A big candle close under, that means that price really wants to like shift. So I'm going to just take my profit at that first. But if it's like a small candle and it kind of breaks under, I do 2 candle closes under the EMA 9. Usually on the 5 minute is like the best one. So now you have 3 ways to kind of play this out. Any questions? That was pretty straightforward. Yeah. But hey, some people have questions. I heard about some scalping strategy where if two candles close above or below the EMA, you could play either side. Yeah, you can definitely do that. I usually need more confluence, reasoning for using the EMA. Usually something else is the reason why I go in, but then I use the EMA kind of to guide me. But that's like if price is acting really bullish. Now, you could do reversal candlestick patterns too. So if you saw something coming up like this and then you had the confirmation that this candle coming down, you would have basically gotten out, somewhere over here based off the candles, over here based off the EMA, and then, or you would have taken it kind of up here. So, so far so good. Okay, no, okay, cool. So those are the three ways. I say, it really depends on how strong that breakout is. Sometimes, like let's say this, right? What is the best time frame to look at the EMA? So for me, I like the EMA. It really is preference. I like to say look back at whatever. Sorry, I had to burp. But look at whatever chart that you're wanting to trade or wanting to chart and analyze, and just look at the EMA on the 15-minute or the 5-minute or the 3-minute and see which one would have given you the best opportunity to get in or get out, and which one would have faked you out too much or which one was too slow. For me personally, the nice blend, the nice in between is the 5-minute. I think anything before that, look, if you go to the 3-minute, it'll start to fake you out more. Let's see, let's go back to that time. Dang, how far back was it? Wait, let's just zoom out. Okay, so if you go to the 3-minute, you'll see that here, look, it actually came up and you would have actually gotten out maybe a little bit earlier here, but you can see that it was under, like, I'll show you maybe a better example somewhere else where on the 5-minute, it will keep you in longer. It might be a little bit slower, but it'll filter out a lot of the fake outs. I mean, the 1-minute is like, that's just crazy. Like if you use the EMA on the 1-minute, you can use it for the beginning of the day. I like to use the EMA on the 1-minute for the first 5-10 minutes of the day, just because the 5-minute candle it needs to close like 2 times before the EMA can really like move. So at least this one, but you see how this one is really tight, and it would have actually taken you out here. And you remember the other one would have taken you out somewhere over here. So it's about kind of figuring out which one works with the price action that you're seeing. Some stocks are a lot more impulsive and they move really violently, like Tesla and stuff. You might want a bigger, like a 5-minute time frame, because you'll get a lot more fake outs. Some of them you might need even bigger time frames. It all depends on how long are you holding your position. Are you like doing a 2-day swing in the week? Are you just doing a quick day trade scalp? There's a lot of different reasons why, but overall for me, I like the 5-minute, but I will flip. One thing I will do is I will keep flipping through each one and seeing which EMA it's reacting to at that time. Because just because you're looking at the 5-minute, it might have actually gotten rejected on like the 3-minute EMA. You'll see a candle and then a wick, and then it kind of falls down. You're like, okay, it's reacting to the 3-minute EMA. And then as soon as it stops reacting to it and it breaks through, you switch to the 5-minute, and then you're like, okay, is it above on the 5-minute? Because it will flip above and below quicker on the shorter time frames, which means that as soon as it flips on the 1-minute, maybe it didn't flip on the 3-minute yet. And then once it flips on the 3-minute, maybe it didn't flip on the 5-minute yet. But if they're all on the same side, okay, that's pretty, that just means that, yeah. Does that make sense? So to be more conservative, I could use the 3-minute. Well, to be more conservative, you want to go back and, yeah. So if you want to be conservative, meaning you want to like get out quicker, or at like the first sign of a price kind of acting weird, yeah, you would basically get out with a shorter time frame. If you wanted to kind of ride this thing out, then you would definitely use the 5-minute. But also make sure, look at your levels, right? The levels are gonna dictate, more importantly, like what's gonna happen. So maybe it, I don't know what let's say that Tesla breaks 1,000 and then it kind of comes back to use it as support, right? So we have like a role reversal. So we have like a, you know, this is the 1000 line, and Tesla does one of these where it breaks out like this, and then it kind of comes down to test this in order to go back up. Well, if you're on the 3-minute, you know, it might fake you out and take you out here, when in reality, you know that you would probably want to get out if it broke under 1000. So the level is more important than like the EMA when it comes to that. But if it's within a level, and yeah, you would want to be more safe, do a quicker, more sensitive one if you're already in it. But the 5 minutes is a nice blend for me. It's a nice, especially with impulsive moves. I think it's the best. Oh, whoops. But yeah, and then let's see. So, and then we see that, you see how price has been, it popped up above it and it never actually closed below it here. So it's been on a strong uptrend since the morning opening on Apple. Came up, has stayed above the EMA, and then look what happens. As soon as it crosses under the EMA, look what happens to the price. It goes flat. You don't want to trade this. You want to be well out of here. Let's see if it does it again. So see, now price is getting a little bit more violent, right? Here, it's like it really doesn't want to be here. It doesn't know what it's doing because it's at all-time high territory. It's already in all-time high, so it keeps making new all-time highs. Everybody wants to keep selling. Nobody can trust it. It's at 160. It goes above 160, breaks out. So like here would be very hard to use the EMA 9 as your guide, right? At this point, it's kind of hard. But as you can see, look, right here, there's another triangle. You guys see it? Yeah, we could do that. That would be, yeah, we'll do that. I'll set some levels. But you guys see the triangles constantly forming on the uptrend? So we have here, right? So look, if you do this wick, you're missing out on all of these. So what I do is, look, if I can touch more, I'll make it tighter. Yeah, it's all practice. You know, your eyes will spot it. But you see how you could have used the wicks, but then it would have just gave all this empty space that was unnecessary? And that price actually corresponds better to what? This here. Look, now we got to tap there. We got to tap here, 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 and then it just rides it up, and then it pops. Look at the volume. You guys see the volume going, okay, we're going lower, 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 and then pop. I was trying to make one big triangle. Let's see. Let's see if it does make one big, whoa. One big triangle, how so? Like on a bigger time frame or something? Or you're saying like all the way up here and then? No, that's why I couldn't see it. Oh, okay, I get what you mean. You were kind of focusing a little too big on it, yeah. So, and then we kind of have it happen again right here. Look, price is kind of coming down. You know, sometimes, you know, it's a little sloppier, and that's why it didn't have the same strong response, right? Now, if you look here, look at the volume corresponding. Comes up, comes down here, and then look right here, pop, but then it drops, right? These are different days. That's one thing you have to notice too. We're on the 5 minute, so if you see like a really dramatic reaction like this, it was at 6:30 in the morning, you know, Pacific time. So the market is the emotional reaction that happens at open sometimes will kind of mess up you know, just like how news messes up patterns. So that's something to kind of keep note of, is like sometimes you'll see something like this happen, and you know, it was just market open selling, you know, that was happening. But so yeah, here I don't really see any triangles. As you can see, it just looks like price is kind of ascending up. No real pops in the volume. And then we look over here. Let's see. So we get a nice little top, and then we start kind of selling off. Let's see what happens. Let's see if we can get some bearish triangles, because we've seen a lot of pops. I want to see some good drops. So obviously I'm cheating because I can see the future, but I promise you I would see these things as well if it didn't. Let's see. Let's go here. No. Come back up. It looks pretty ugly. Let's see. Well, yeah, I mean, this is when Apple was doing that bullish run, right? Ran all the way up. This is when it hit that top. And I was kind of, I think I brought it up in the stream and I said, hey guys, on the Sunday before it did this, I said that this level right here is going to be crazy resistance, because that's when Apple hits 3 trillion in their market cap. This whole run here was the reason why all of this was happening, is because the market really likes when we reach a goal. Oh, Tesla to 1,000, or Tesla to a trillion, or Bitcoin to a trillion, whatever. So anytime that kind of stuff happens, you want to make sure that whatever level that is, that it ends up being that thing. You want to be careful at that level, because look, it's exactly happened. It came up here, it did it, and I think it hasn't even been up there ever since. So just got back home feeling like shit and got a nasty headache. Gonna get some sleep. I'll have to peep the rest when you upload it. Thanks again for more fire content, homie. Have a good night. Thank you, man. Yeah, you have a good night. Get some rest. Take some leave or something. So just to kind of add to that, right? Look, and then it happens. It tries to do it again. Another rejection. Here, good day, fellas. Excuse my tardiness. No problem. Yeah, you're late to class, man. Yeah, you gotta... Let's see. I don't know why I did this. Maybe it was when I kind of set and didn't really... I forget it or something. It wasn't too big. Now, let me... okay. This just reminded me. So, people are saying... here, let me actually refresh it again. It's getting a little slow again. Wait, what? That was Apple? That was fuel cell. Or no, wait, this is the one. Never mind. I'm sorry. So people are saying, hey, where do you enter? Right? Wasn't that my question that I didn't answer? I don't know which one I answered, but it's like, okay, so, where do we enter? Do we enter on the breakout? Do we enter, what do we do? Well, first, I would say you want to just do the breakout retest, which sometimes you'll miss out on a lot more, but since you're starting, you don't want to be aggressive on anything that you're starting, right? Anything that you start learning, you don't want to go the aggressive route. You want to go the conservative route. You want to be a little bit more protective of your money, because it is your money, guys. You got to understand, it's not some imaginary play money. This is real. Like if you saw 100, 200 bucks on the street and you picked it up, you'd be pretty happy, right? So treat that same mindset when you're going into the market. Not saying trade fearful, but trade responsibly. So there's different ways to kind of assume a position, right? So let's say this is a bullish pennant, and it, price kind of comes up like that, does here, here, here. So by that time you already charted it, and then it wants to break out, right? So, and we'll kind of push this down. It didn't break down, I promise. It's just whatever. So we'll start with the aggressive just to kind of get it out of the way. This is what I like to do now that I can actually trade these pretty well. So once I see the price kind of coming here, and I've done my my TA, and I understand that, okay, this one has a higher chance of being bullish price action, I actually end up buying positions at the low bounces of my trend line. This is where I start buying calls, right? And then maybe the last bounce was there before the breakout. Let's say it did kind of go like that. So I'm buying here, here, here with smaller positions. And then I might add on the breakout, but typically, I already have it. This is my aggressive way of getting it. Now, why do I do that and not just buy somewhere in the middle? Well, if you're buying a call, where is it the most expensive in this situation? It's the most expensive up here. These are the times where, especially right there, because after this crazy move, you know how many people FOMO and overpay for contracts? If you're trying to ever sell anything, I always tell people, stop taking screenshots. When you see that big jump happen in your premiums, if you're day trading or you're scalping, that's usually the time to sell. When that excitement happens, instead of going, hey, yo, it's going higher, it's going great, that's the best time to sell, because it's usually the highest, the most expensive that it gets. And this is why a lot of people, instead of being screenshot warriors, it reverses and it never gets back to that high. On it said on Robinhood, you probably have enough time to place your order and and screenshot. Seriously, yeah, with that slow fill, right? And so here is that really good time to sell, right? or I mean to yeah, to sell out of here. Well, these are the worst times to kind of do it. So people who are kind of FOMO-y, or they want to, you know, get they're like, oh, it's the breakout's happening, and they want to get ahead of it, they actually end up overpaying. And what happens? It goes down to retrace here, and they're thinking, oh my gosh, I'm already negative in my position. Their mindset's already in a fearful state when it's just doing its formation. But you know what the problem is? If you bought a call here, you're not getting paid back until here. Look, we'll do like a little. So if you buy here, you're actually not really getting paid back. You're break even almost on the breakout, right? So where's your stop loss in this situation? If your stop loss is anywhere here, you pretty much, it still does what you wanted it to do. If you go up here, your stop loss has to be all the way down here, like at this level. That's not fun. That's deep. Just to get like a win here, your risk to reward sucks right there. If you put the risk to reward here and you put your stop here, just to have a 1-to-1, it needs to break all the way here. That's really bad risk to reward. You need it to go, and I always tell you guys, if it isn't a 2-to-1, don't even get it, right? Well, a 2-to-1, you would need price to move so much higher in order to even get a 2-to-1 risk to reward to make this thing worth it, right? But if you buy down here, let's say I buy here on the downtime, right? Let's get this out. Let's get rid of that. Now I buy my first position here. You know, if and the thing is, look, you can't even buy your first position here. This is just like an example because it would have had a lot more like coming lower. But usually you need the 2 taps. So I'd really actually start buying my position here and here. Because this one, if you take all this off and you start here, it doesn't look like a triangle yet. So why would I be embracing for a triangle I never saw, right? Now I should be shooting a whole movie mid-trade. For real, I just press the print screen button, then get out, and then post a picture after I get out. Yeah, you know, I mean, you know, it's fine to take screenshots. I take screenshots all the time too, but yeah, definitely get, you know, what you need done first. Or have a second window. Sometimes if you're on the computer and you have a second window, you can sell out of one and then take a screenshot on the other or whatever, because it doesn't like load the stuff. So but here, okay, so let's get rid of this one because that's impossible. I'm not a mind reader, you know, I don't know. So 1 tap here, 1 tap here. This is a second tap, this is a second tap. So now you've set your lines here. You maybe assume a position at that retest here and comes up. You're already profitable here and you're already profitable here. How comfortable are you sitting in a position for a breakout when you're already positive in it? You feel a lot better, right? I know you guys feel a lot better when you get into a trade and it's already coming up, you're already in profit, and the move hasn't even happened yet. That's a good feeling to be in, right? So I buy at these lows, at these low points. So like on Apple, let's go back to that day, way back in the day, and show you kind of an example like in real time. Let's just zoom out and try to find the level. Okay, cool. So we'll go down, go lower. It's getting laggy again. Jeez. Okay, Control R, whatever. What? Okay, Apple. What's going on here? Okay. Oh, wait. I'm way too low on the price. Jeez. What is going on here? Wait, where did the... Huh? What happened? Okay, I was like, what? What's going on here? I don't know why I turned it off. Object tree. Okay, so sorry for all that extra stuff. So here, so this one was a tough one because remember that it had this weird space here where it didn't really retest. But if it did, we're gonna use this, came up. You can even use this path to kind of show you like a good area of price point to kind of, you know, do it. So like there, here, and then there, right? So ideally what I would want once I see this is if I saw that this thing tapped it here and tapped it here, I'm like, okay, the next time it taps my support line, all right, cool, I'm gonna buy here, and then I might buy here. The reason I do that is, again, risk to reward. And another thing is your stop loss is a lot tighter when you buy at the bottom. Because look, if I buy here, let's, this is a bad one because there's not that set up there. Hold up. Maybe I'll do the other one that happened. Okay. Okay, maybe this one. Okay, this one seems a little bit better. So we get a tap here, right? Get another one. I think we came up, tapped here, came up, tapped here, and then came up, tapped down here, and then we shot up or something, right? So at this moment, you have one tap there, one tap here. I would have bought at this bottom here. When I buy here at this level, where would my stop loss be? My stop loss would be at these lows because these are higher lows, which means that if price goes below this low, it's not making a higher low anymore. It's now starting a downtrend, right? So that basically negates my structural trade that I'm trying to do. So my stop loss would, if I wanted to be like, relatively like tight, it'd be right here. If I wanted to be a little bit more loose with it, it could have been anywhere like right here. Because if price does actually come down here, that's it. Like this formation of coming up basically means that it probably broke down. So now if you look at your risk to reward in this setup like this, you know that we'll click here. That's the entry. This is your original stop. That's, look at that, 8.5 risk to reward. Just playing off this big candle right here. 7.5, right? You move it down. Let's just say you're trying to be a little bit more conservative. You're still at 2. You see why it's more important to buy on the depending on what side you're actually wanting to trade. It's important to actually buy at the lows. You know how they say buy low, sell high? That means you actually have to buy at the lows. Now, the reason why I say it's aggressive, yep, that extra monitors are extra useful. Okay. So the reason why I say this is the aggressive, you're like, wow, that's perfect. Like, I'm just going to keep doing that. Well, the problem is the reason why it's aggressive is because this hasn't actually broken out yet. So what you're doing is you're getting ahead of yourself. This could fail. And then, it could get a big red candle coming down and might actually go through your support and resistance areas. So the risk is that if it doesn't do what you think, you didn't get the, how I say don't predict, react? That's usually how you should be trading. Now when you get more experience, you could have more so educated predictions with a good risk management. That's totally fine, right? So here, if you play preemptively before the breakout, that's the risk that you have, is it could actually break down, or it could break, it could just, fail, or the structure can kind of mess up, or you could actually get stopped out with a wick, and then it continues to do what it wanted to do. So buying at the bottom on a bullish one, buying at the tops on a bearish one is the aggressive way. Now the conservative way, let's see, where is it at? Now oh man, this is a pain in the ass. Okay, that, and then Control R. Let's sell. Where is the price? Where is my presentation? All right, cool. So just to use this, that's why my things disappear. I remember I hit them. Okay, so now we're back. Sorry. So for this, the conservative way to trade this would be you actually trade the breakout. Once you get confirmation from a huge volume candle or whatever, you actually take the position. You would take the position at the breakout, basically at confirmation that it's doing what you wanted it to do. This example is a symmetrical triangle, is in the moment. Would you also have thought about getting inputs after it hits the top leg of the triangle? Are you saying for the Apple example, like here? Getting in at that point, I mean, I would need a little bit more reasons to buy puts. Like if it was at resistance here, then yeah, I would buy puts. If there was, that, like if it was at a resistance plus there's reversal candle setup going, okay, maybe I might do puts. But I don't like to do puts on a, without like relative, like knowing like the level that it's at, right? And Mad Rob will get to like charting levels and kind of using those and seeing how they react to it. But yeah, I wouldn't really get puts here. I would more so, because this is a bullish. Look at this. This is how it's been the whole day. Let's see. Yeah. So the whole day, when did it open? Like around here, and then we get that giant jump. That's kind of scary. I wouldn't really want to be buying puts, on this really bullish price action. It's kind of is risky. You're really swimming up like heavy waters that are kind of unnecessary, when instead you could actually play with the trend. Now, if it's at an all-time high, like it's sitting, or there's a resistance coming up above or anything like that, yeah, then I might do it. I think I did it on Thursday, if you remember. There's a triangle breakout like this on the SPY, and I ended up getting puts because I was trying to see if it would break under 470, which is funny because it ended up dropping really hard at the end of the day. Like right at the end of the day, then all of a sudden the sellers that I was looking for the whole day popped up. So go figure. But yeah, so I would just kind of keep it as bullish price action. If the price is kind of moving in a direction aggressively, you want to trade that trend until it hits a resistance. Then you would have a better risk to reward in this setup. Hopefully that makes sense. So you take the breakout, right? So if we open the volume candle here, what is this? So that this is the confirmation breakout. It did go out of the formation. Maybe it actually did break out on the 1 minute. Let me see. I need more detail on the candles. Okay, let's see. So yeah, so it actually did like a bull flag here. So it actually, once it broke out, wait, am I looking at the same one or am I looking at a different one? No, yeah, this is the same one, I think. So what it actually did is, look, if you're looking at the 1 minute, you get more details, which is why I like it. It actually did a bull flag here. So you see how price didn't actually get tighter? I stepped away for like the last 10 minutes on Thursday, and I just saw what happened to the SPY just before close. Yeah. I mean, that's what I was waiting for. And I'm telling you, if what I was, reading on the price and like from the patterns that I was looking at on the SPY, if it did what it did at the close in the morning when we were in the lives, we would have had easy, like, crazy gains on the on those SPY puts. But like I said, every day it doesn't work, right? Sometimes as a trader, it just doesn't work, and I don't really, I don't hold on to it. I don't really be like, man, it is what it is. I had a good week, so it's whatever. But look, here you get this right here. You get a kind of like a soft breakout, but then what happens is it actually does a bull flag. You guys see the bull flag here? Pop, retracement, but it's parallel. You see how it's not tightening or anything like that? These wicks are kind of in unison here, and then the body and price is kind of here, and then it has that nice confirmation break all the way up, right? So this would have been what I think is my third way you can actually trade it, which is the uber conservative way, which I would recommend for you guys. And if you guys are trying these things out, the aggressive one is hopefully what you guys will become, right? In the future, that's how you can trade them. Knowing your risk, being very disciplined, and having those good habits, you can actually trade them kind of how I trade them, aggressively, by getting these bottoms and then taking it and having a good risk to reward. Now the middle way of conservative is you take the break. Now what's the downsides to it, right? The downside to taking the break is that you might not get a fill, because if this thing is running really hard, you might overpay on accident. You might get in really when everything is spiking, and if it does like a little fake out, comes back, you really bought like super expensive ones, right? But if it continues up, you're gonna get paid. Even if you buy overpriced contracts here and it runs all the way up here, you're still in a good position. So there's still risk to playing breakout trades. Now the third one, and the one that I think is the best, has the highest win rate, is you actually wait not only for the break, but you wait for the retest. So what happens is, here, what typically happens, and a lot of very, very experienced traders do this, and this is kind of their rule, is they don't actually bite at the breakout because they think they're going to get faked out. what they do is they wait for the breakout to kind of come back down and retest that line. What do I always say about support and resistance and role reversal? Previous resistance, once broken, can become new support, and that actually is the confirmation that it, the line is being respected and the price is being respected, so you could actually see the move go up. Does that make sense? Thumbs up if it makes sense. Questions if you have questions. I was talking for a pretty long time, so I hope like you guys didn't get lost. Okay, cool. It does. You said it does just a lot. But indeed time. Yeah. And so I actually do the break and retest on a resistance break or a support break. That actually adds. So what I do sometimes also, I'll give you another one that's kind of in the middle, right? Let's say it breaks up. Buy half your position, and then on the retest confirmation, you can get your full position. That way, if it doesn't ever do a retracement, now look, the downsides of waiting for a retracement, sometimes it never happens. If you look here on the last one, like this one, look, break, there's no retest. It just took off. That's it. There's no retest. This one had a retest up here, and then if you come back to the earlier one, I don't think it had a retest. Let's see. Oh my gosh, where is it? Okay. Did this one have a retest? No. And if you are looking for a retest, you're probably going to see it on a 1 minute. Usually you don't see it on the 5 minute time frame, because there's not, usually the retest, it doesn't take long. It takes like one candle or two of the 1 minute to do it. But no, so like see here, it breaks and it doesn't look back. So that's kind of the downsides of being very conservative, is that you don't have that pushing you to go in. But the same can be said for the aggressive way, where at least, in this end, you waited for the confirmation. You have a higher win rate on the retest. You have I think on the aggressive one, you would have a lower win rate just because of the fact that you're going into something that actually hasn't broken out. And then the one in the middle is, you're just, hopefully you can stomach the retrace if and when it does. And then that's kind of your stop loss, right? So I gave you the stop loss for the aggressive way. Usually the last two taps before you got in can be your two levels, depending on if you are aggressive or if you're, conservative. And then on the break, just the break out, you definitely are going to have your stop loss at the level before. So let's say you take the breakout here, then the first or the last touch is going to be that level that you get out. So I'm going to, instead of aiming arrows, I'm going to start putting this line. So let's say you enter there, then your stop loss would be if it broke under this level, right? Like if you entered there, at the break, you got the confirmation, cool, that's your stop loss. Because you know that if price goes from breaking out and then comes back down below here, it's now making a downtrend. So you don't want to do that. Now, the same thing would be said for the retest, right? If price goes and retests like this, wait, not curve. If it does one of these here, boom, 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 boom. Let's go here, last tap, breaks out, right? But then makes a retest like this, and then it really breaks out like that, right? Those are like the perfect ones. This is super ugly, but forgive me. Then you would enter on that break. So you would probably enter about the same as the original breakout range, but now at least you have confirmation. So now you know that is the tester, and then you would have a stop loss basically just under that that level, whatever works. Is it a psychological number? Is it anything like that? You really don't have to go too shallow, because once the retest happens, if it tests it again, it's probably a really weak breakout. So you really don't want to stay in it or have really deep stop losses or anything like that. So hopefully that makes sense. Now you can you have a roadmap to how you should be entering a triangle, how you should be trading it. Definitely support and resistance, chart that stuff, because that stuff is going to help you, succeed in that regard. The levels for Apple, let me look. Jeez, Apple's doing that thing again. Oh, no, 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 no. What happened? So I gotta go back to the object tree. Oh, okay, wait. What's happening? Oh, okay, there we go. I was just on the wrong time frame. So we can chart some levels on Apple. So, and I used to have levels, but they don't work too well. Let me see. I got them all deleted. So here, what do you guys? All right, how about we do this together, right? So what was the first thing that I said when it came to charting? You go to the daily, and then what do you do? Let's see if you guys remember. What are the things you really want to look for? Mark impulsive moves. Let's see. Let's see some answers. Give me some answers, people. I won't read them. I'll just, you know, once you guys kind of answer, then and if you answer, I'll kind of get to the next one. Okay, support resistance. Yeah, Lav, I was saying, what's the first step in doing support and resistance? Like what is when you're charting support and resistance, what's like the first things that you want to look for? Yeah, I know, my question is sometimes a little off. Okay. Let's see some more answers. So, projections, okay. Identify a trend if possible, okay. Reversals, okay. Triangles, okay. And impulsive move, okay. Good answers, guys, good answers. So, first step definitely is mark the impulsive moves, right? That's the first one. So you can use you can use the arrows to make it easy if you want. You know, you start from anywhere from like a nice support range, something like this, but you know that right there is when you come down here, made an impulsive move up, made an impulsive move down, and then now we have an impulsive move up here, we have an impulsive move down here, and then that's about it. We do not use the most recent because nothing is significant about that. So that's the first ones. Apple really, the support that it has lately is it's not that hot. So we have a nice little bed here. I'm gonna make it a little bit darker just to set these lines. We have another one like right here, another one up here, another one up here, and then we have that high there, and then this, where is that? I can't even see. Cool. So we have those for sure. We have the high, the complete high and everything. So now we go, and then somebody said previous high and low. That's very true too. So that's once we start breaking it down, that's basically the last levels that you're going to do, because those are the ones that you're going to use for the trade that you're going to get into, right? So first, yeah, you start on the daily, you do the most impulsive moves there, and then we go to the 4 hour, and then what are you looking for at the 4 hour? So I think this was supposed to be there. This is where you have time to kind of adjust, because you know where all the impulsive moves are, and you know that was an impulsive move. I was a little off. You pull that down. You know, that was an impulsive move. Is correct. Cool. And then we got a nice little, you know, area of support here. So now what do you guys do on the 4 hour? You guys look for areas that had you know, areas of role reversal, and some areas of that's been prices congested, and you know that it's been having issues within each of these levels. Sometimes it's small and you don't need it. Sometimes it's big like this. Like you can't just have 156 to 169 and expect to trade it. You got to get actually into the nitty gritty, right? So now if you kind of pull it here, you notice that, let's look right about, let's see. So we have these double rejections here with the candle closes, and it used it as support here, and then it got rejected here. You see this area right here? See how here we get these rejections from the wicks here, 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 and here. You guys see that? I'm going to change the color of it just so you know that this is the, I'm going to make it thinner and turn it into the, or I'll keep it thick, but I'll change the color so you know that that's the 4-hour level. You guys following so far? You guys can kind of see how this area would kind of be some trouble. And this is all good practice. You're not going to have an eye for this right away. And some of these levels, look, I might chart something and think that it's good, and then when it reaches it, it doesn't do anything. And you just know that, okay, this level's not that significant. But some other ones definitely will, right? So now we look at, let's see, right about that. Oh, and definitely look at the areas like 160, you know, 165, the areas that, you know, 170, wherever that is, like over here somewhere. Those are areas that you definitely have to watch out for too. But we'll just get closer to the price because this is, or where was that? Here, right? This is the area that we were kind of looking for. Who asked that question? Mad Rob. So the issue with the levels here was that this was actually when it was doing the, if you look back here, you see how as soon as it broke this all-time high, that was it. So once it broke through that, and now look at the triangle levels that we had. So that 27.25 was the all-time high for Apple at that time. So once it broke that, these are new. We didn't see these levels coming up. So then what you have to use is you just have to use the 160, you know, the 165s. You have to use every dollar if that's what it does, you know, every dollar range, the 161. We'll see how this reacts to it, right? So 161 will go down. We'll go 162. I like to use dollar amounts if we're a stock priced like this. If it starts breaking all-time highs, definitely just go dollar for dollar and then see if the price actually, you know, responds pretty well to it. So we broke up, and then now that 160 was the range. So now let's just break into it and check out how that actually reacted. Okay, so we're gonna go back here. We're gonna see how, okay, if you traded this and it came down, what is this? This is the all-time high. See? So price broke above all-time high. Now we got more context. You see how I was looking at this without a triangle? I didn't know what was going on that time. I had no clue like what was going on, but now we got a little bit more of a story. This is the all-time high break. So now from here on out, that's why we got that big sell here. It's because when the market opened and it was above all-time high, people were like, okay, people are going to take profits. We're going to get out. But look what it did. It came down and it actually used this range here. It was about 20, how much? 20 cents off this level. And he used that as a wick support to kind of come back. Cool. So we got above here, and then look what happens at 160. Look what happens at the price. Do you want to be in that right there when it starts doing all that weird stuff? Nope. Yeah, you. Hell no. That's funny. Yeah, and so, you know, you don't want to, so if you knew that ahead of time, right? Let's say we were trading this, and let's say, you know, for whatever reason, let's say a nice triangle break happened here. You would definitely be wanting to take profits, not at 160. That's too late, right? You want to actually be taking profits just under it at that 1580 range, somewhere around here. That's where you want to actually start taking profits. So, all right, get rid of this border. So that's the kind of the money area right there. What's up? Hey, what's up, Dan? That's the area. So now look, but look what happens. The price is still ascending, right? We're still on an uptrend. See how we're still on this like uptrend? So that means that price, it breaks up, and then look what it does. Roll reversal. So if you wanted to take a call position, this would be a great confirmation. Break, retest, and then it continues upwards. So this would be a good sign. That doesn't mean take it, but I'm saying this is a good sign that you can take this into win. 161, look what happens. Rejection. And then it comes back down. And then the next day, look, it actually gaps up. This is when price is moving erratic. It's really hard to chart things that are moving this crazy above all-time highs. It does get really hard. But look, just use the dollar amounts. Look, let's just use a dollar level, right? So we get some resistance at this level. I think that was one of those impulsive moves, but cool. We come up and look. We break through 165 here, but barely. Let's do a level here. And I'll show you guys. Let's go 165. Imagine if you just played in each level. Could you flatten that line just a little? Flatten it? Like, like make it thinner? Okay, I just wanted people to kind of see. You want it kind of like that? Is that better? Wait, you said couldn't you flatten that line just a little bit? Or are you saying about the trend line? Oh, okay. I was like, I was like, dang, Rob, you getting a little picky now? No, but yeah, could you flatten this? Like, yeah. Like, you mean like this? Right? That's kind of what you're saying? Yeah, definitely. I was just talking, so I was more focused just on this level. But yeah, good observation, right? Now you can see that like the trend line touches. All right, cool. We're touching it. Cool. So, but yeah, that roll reversal happens. We get 161, gap up above. Well, cool. Since we gapped up, that bullish price action, that's right at market open. So you're waiting for that moment when the market goes, okay, we're getting a little nervous. We're getting a little too high. Look what happens at 165. Look at that candle, that nice little doji sitting right there. And look, it doesn't really get much higher. It actually gets rejected before it goes to 166, but it didn't go much higher. And then look at this level, look. And look what happens here, rejection. Look what catches it, 163. Then it moves up, tries to use this, but breaks back down. Look at the level it's trying to use now as a support that it keeps fighting over, 160. You know what I mean? And we set these lines earlier too. Like, I didn't know that it was doing all this near that range. I just used the psychological numbers. Look at what happens at 162. 2 rejections. Boom, boom. This is why psychological numbers are really important. People like to sell here, and bears like to flood the market here. So now we come up, we go back up. Look, we use 160 again as a nice little support. Look at that. Apple just does really good with the dollars. Look, 162 uses that as support. Kind of comes up, comes about halfway, but it gets rejected and it gets caught here. Comes up, catches it again, comes up, uses 163 here as a wick, makes a leg higher. So trading Apple dollar for dollar is not a bad idea. So if you just took a play and said, okay, when I take this break, I'm going to take it to the next dollar, I think 164 was like right here. Yeah, so we have a level, and then we have that 164 right here, which ended up causing us some trouble here. Used it as support, broke under, broke up. So yeah, I hope that does that make a little bit more sense? Like, I mean, if you guys are going to trade Apple, that's one thing I just noticed now, is that it responds very well to psychological numbers. Some stocks don't. Some stocks, they don't really care. They have like more impulsive moves, so they move too fast, to respect that. But most of the time, your odds are really good. Look at that nice collection here, right there on that 160. And then it shoots up above, and then now it starts using that 165 as support. Shoots up above. We could keep doing this. Where's 170? So yeah, you guys can have that on your charts now. Every dollar basically is a good level for Apple. You can play Apple dollar for dollar. We'll do that 168 here, and then we'll do 167. We'll do 166. Let's just see. It looks crazy, right? But you guys that have your grids on your right there, whatever, right? So this one's pretty close to it, but you guys get the gist of it. Thumbs up. You guys understand now? Play within a level. If you're going to do a triangle breakout, make sure you have your levels so you know where price is usually going to you can make an entry off these. You can make a like a put entry if it breaks under a level to the next level. And that's all you really want to do, right? You don't want to focus. It looks like noise all out here, but you're not looking at all of these lines. You're looking at whatever the price is at currently. When you zoom in, the clutter goes away because you don't care about anything else other than these right here. That's all you care about. You don't care about all that extra stuff back there and up there and anywhere else. This is what you're focused on. So you're like, all right, cool. If it breaks under here, my stop loss is going to be above, and I'm going to take it down to this level. All right, cool. This level broke. Okay, cool. I'm going to take it down to the next level. But I'm telling you, it doesn't work with every single stock, but Apple seems to be, responding pretty well. So cool. We got that. Let's see. Let's see if we got anything else here. Thank you for your time. I'm out for the night. Gonna review my notes. Nice, man. Hey, have a good night. Take care. So, yeah, that's basically Triangles 101. So if you guys have any follow-up questions off that, let me know. If you feel like, all right, cool, there's a lot of info, I'm going to review it. That's cool too. But I think, how long have we gone on now? I can't even tell. 2 hours. Welcome to my 2-hour triangle class. Is this recorded? Yeah, it's recorded. Yeah, I'll post it and I'll announce it when I do.